Good morning, my dear students. Today we are going to discuss SEBI guidelines for issue of securities. In our previous classes, we have discussed the new issue market and its functions, role, etc. Now we move to the SEBI guidelines and primary market intermediaries and advantages and its disadvantages. First, we can see that SEBI guidelines for issue of securities. We know Securities and Exchange Board of India is an apex institute as far as a security market is concerned. It issued different guidelines as and when required. These guidelines were first issued on 11th June of 1992 and were amended subsequently whenever required. It has now issued consolidated guidelines as SEBI Disclosure and Investor Protection Guidelines 2000. And the guidelines shall be applicable to all public issues by listed and unlisted companies. Broadly, there are three methods issuing securities to the public. We know that first one, that is conventional mode of receiving application through bankers. It's a traditional method of issuing securities. Paper applications are received through bankers and it is scrutinized and allotment is there, and subscription, everything, placing of shares, etc. is over. The next method, that is book building. Then the third method, that is online system of stock exchange, that is EIPO, electronic public offer. So these are all the important three method of issuing securities. SEBI has issued a number of guidelines for related issued a number of guidelines issued for issuing of securities. So at the end of this video, you have an assignment to list out various guidelines regarding the issue of securities. All of you please submit it on Google Classroom at the end of this video. Then next, these three method of issue securities, I think all of you have studied in our previous classes. Now next, that is primary market intermediaries. We are already discussed many intermediaries in our money markets, as the case as in this market also, many intermediaries. First one, that is merchant bankers, then underwriters, bankers to an issue, registrar to an issue, share transfer agent, debenture trustees, broker to an issue, portfolio managers. These are all the important intermediaries or agencies. Call it as intermediary, play a crucial role in the process of issue of new securities. Let's just see first one, that is merchant bankers. We know it's a bank or it's an institution which provide a number of services, including management of securities issues, portfolio management service, underwriting of capital issue, insurance, credit syndication, financial services, project counseling, etc. and etc. They mainly offer financial services for a fees. They charge a fee for their services. They are also different from the dealers, traders and brokers of securities. It has become mandatory now that all public issues should be managed by merchant bankers, acting as the lead manager. But in the case of right issue not exceeding 50 lakh, above said or this condition is not applicable. So that's all about merchant bank. It's also known as lead managers. Merchant bank is also known as lead managers. Mainly they are charged some fees for their services. Okay, the next one, underwriters. We know we are already discussed what is meant by underwriting. Those institutions which are doing the same practice of underwriting process, that's called underwriters. Underwriting in the context of a company means underwriting is the responsibility of for giving a guarantee that the securities offered to the public will be subscribed for. Those institutions or firms which undertake the guarantee are called underwriters. It's similar to the insurance in the case of, or in the sense that it is provide protection to the issuing company or safeguard to the issuing company against the failure of an issue of capital to the public. These underwriting process that ensure the success of new issue of capital, and it helps to, or the shares or debentures are not subscribed by the public. In such a situations, underwriting agencies will take an responsibility to the subscribe these shares. So in such a case, underwriting is therefore an act of undertaking the guarantee by underwriter of buying the shares or debentures placed before the public in the event of non-subscriptions. So next one, that is bankers to an issue. We know from the term it is very clear, banker to an issue is an important intermediary who accept applications and application monies, collect all monies or application monies, refund application monies after all allotment, and participate in the payment of dividend by companies. No person can act as a banker to an issue without obtaining a certificate of registrations from SEBI. So those institutions have got in prior permission to act as these bankers to an issue. Registration is granted by the by the SEBI after it is satisfied that the application process the necessary infrastructure, communications and data processing facilities, and requires manpower to discharge its duties effectively. Then banker to an issue has to furnish information as stipulated by the regulations to SEBI, as a number of applications received, a number of issue for which he has acted as a banker to an issue, the date for application, forwarded applications, etc., etc., and the date of refund, etc. So all these are all the activities of bankers to an issue. The next, as in the case of bankers an issue, registrar to an issue or share transfer agent. Registrar, as in the case, the registrar to an issue is an intermediary who perform the functions of collecting application from the investors, keeping a record of application, keeping a record of money received from the investor, assisting the companies in the determination of allotment, helping dispatch of allotment, letter, draft, etc., etc. So these share transfer agent, on the other hand, maintain the record of holders of securities. So this is a registrar and issue. It is like a documentation. The next one, that is what we say that broker to an agent or broker to an issue. Debenture trustees. Debenture trustees means the regulation, SEBI regulation defined debenture trustee as a trustee of a trust deed. Giving debenture trustee as a trustee of a trust deed for securing many issue of debentures of a body corporate. Trust deed means a deed executed by the company in the favor of trustee named therein for the benefit of the debenture holders. So these trustees or this registration before acting as a debenture trustee is mandatory. Only the following scheduled bank, scheduled bank carrying commercial activities, public financial institutions within the meaning of section 4A, insurance company or body corporate are eligible for act as a debenture trustee. So these are the institutions can only be able to act as a debenture trustees. I will explain once again. Scheduled bank carrying commercial banking activity, public financial institutions within the meaning of section 4A, insurance companies, body corporate. So only eligible for acting as a debenture trustees. They perform the duties like call for periodic report from the body corporate, carry out inspection of the books of accounts, take possession of the property as per the provisions of the deed, enforce the security in interest debentures, carry out resolve grievances of debenture holders, etc., etc. The next important intermediary is broker to an issue. Broker to an issue means those person procure in subscription to an issue from the prospective investors spread over the world or a large area. A company can appoint any person as many number of brokers as it wants. Members are prohibited from acting as a manager or a broker to an issue by SEBI regulation unless the stock exchange of which they are members give its approval and company complies with the listing of securities or listing requirements and undertake to have its securities listed on the regional or stock exchanges. So this is called broker to an issue. Then next that is portfolio managers. As the term it is very clear, portfolio managers means management of its assets or for reducing the risk of investment. We have to manage our investment in different segments. That's called portfolio management. So these are all the important primary market intermediaries. All of you please take down the notes regarding these points. It's very important as far as an exam, public exam is concerned. The next, let us see what are the advantages of new share market. It's very easy. First, that is mobilization of saving. As we know that this primary market helps for mobilizing surplus savings to the individual or institutions or investment. The next, channelizing savings from for productive uses. Self-explanatory. Funds so raised are used for expansion or diversification or modernization, etc. The next source of large supply of funds. This primary market helps for raising or large supply of fund for long-term purposes from investors who are spread over the country. The next, it helps for a rapid industrial growth. That means this new issue market helps for raising a huge amount of capital for a long period of time. That helps for generation of employment opportunities, and though it creates a lot of industrial growth in our country, investment of surplus savings by corporate in industrial sector, it may lead to increase in production and productivity in the economy. In such a case, these are all very important as far as a new issue market is concerned. Then let us see what are the disadvantages of new issue market. It's very simple thing. That is first one, deceiving investors. That means the deceiving means we know what we say that unprotecting the interest of investors. That is deceiving. The corporate raising money through public issue may not disclose detailed information in the prospectus in order to deceive the investors. So it may leads to the investors. It may diversely affect the real investors. The next, no fixed norms for project appraisal. That means the projects for which money is raised are to be evaluated in terms of financial, economic profitability and marketability, feasibility by etc. As there is no fixed norms or formalities or modalities for appraisal of these projects, this may leads to the real or actual investor subject to the personal capacity and capability. Okay. The next one, that is ineffective role of merchant bankers. As we are discussed the role of merchant bank, they are charged some fees for their services. So ineffective role may affect adversely. So merchant banks perform most of the pre-issue and post-issue obligations with regards to new issue markets. But it has been observed that they do not follow the code of conduct and indulge in illegal practices or mispractices or misbehavior. That may lead to disadvantages. Then next one, the last one, that is a lack of confidence among investors. That means it's very easy in its real sense. That is, investors lack confidence in the new issue market, do not want to invest because of delay in the allotment of securities or the delay in the refund of the money if not subscribed. So these modalities or these formalities may lose the confidence among the investors. So these are all the important disadvantages of uh, primary market. So I humbly request you to complete these assignments as a part of this video. All of you please submit SEBI guidelines related to the new issue market on Google Classroom. Please hurry up. Thank you to all.